Good morning everyone. We'll start with our monthly recommendations. First we have HDFC Bank, which is the second largest bank in India, the largest private bank in India. And as you know, last year the bank had merged with HDFC Limited, which is their housing finance company. For housing finance companies in India, they are not allowed to take any deposits from the customers. So regarding HDFC, post the demerger, the stock has not moved much. So this is mainly because the HDFC has taken the loans from the housing finance company. So because of that, they are supposed to keep more reserves in the bank according to the government. So one positive thing that we are seeing with the banks is right now RBI has cut down the cash reserve ratio from 4.5% to 4%. So this means that the extra funds that are being released from the banks, they will mainly use it for giving loans to the public. So because of this, we can see a momentum coming up in the banking sector as a whole. Particularly in the private banks, this last quarter has been very muted. Public banks did comparatively better. So we are hoping that even the private banks will give better numbers after this. Next we have L&T, which is one of the largest conglomerates in the country. They have many other business which is separately listed, such as Mindtree, which is their IT company, L&T Finance. So this L&T is mainly involved in the construction sector, and as you know, it's a highly competitive sector. And ever since COVID, looking at their balance sheet and numbers, so they've been doing very well. Looking at the numbers, top line and bottom line performance has been very good. So recently the company got an order from Saudi Arabia and a few other Middle East countries as well. And around 42% of their revenues is coming from India, rest almost 58% is coming from abroad. And this is only looking to improve. Right now, looking at their order books, the management has given a guidance of 15% year-on-year increase in the order books. And one thing that we have noticed is, being in the construction company, what we noticed about L&T is they are able to really adapt, because most of the companies that they have taken over, such as Mindtree, Finance, L&T Tech, they have all performed really well. And recently management also said that they are planning to enter the green energy sector. They are planning to also enter semiconductors. So looking at this, we can see them growing in a very well way for the next 2-3 years. And next we have Vardhaman Textiles. They manufacture yarns. One problem that we have seen with the cotton sector is none of the companies in India is having any pricing power. Most of these companies that are selling products abroad, especially the raw materials like yarn, the prices are very volatile. So because of that, even though they have good manufacturing capabilities, their numbers are not going up because of this. And why we recommended Vardhaman is mainly because recently the unrest in Bangladesh. So this has caused, lot of customers, Bangladesh customers, are seeing a delay in their orders. So we are expecting some of them to move to India. So because of that, we can see a momentum in the clothing industry. But again, about Vardhaman Textile, I want to emphasize that performance is largely based on their power to price. So that is also one important thing that we'll have to notice. And next we have two chemical companies, Dhanuka Agritech and Excel Industries. Dhanuka Agritech is mainly involved in agrochemicals, insecticides, fungicides, pesticides. And Excel Industries, they provide a little more. Mostly they give materials for API, pharma companies, and also the agrochemical industry as well. Around 3 months back, we have recommended insecticides, Sharda Cropchem, and we spoke that particularly after COVID, the Chinese had done excess inventory dump all over the world regarding the chemicals. So because of this, the chemical prices has almost crashed post-COVID. And now we are seeing recovery coming. Particularly Sharda Cropchem, which we had recommended, had done really well. They have almost gone up 40%. So right now, looking at the other companies, these two seem to be in a reasonable valuation. So that's why we are recommending them. And we are expecting good growth. As we are seeing the pricing recovery, we are seeing top line growth as well. So this is expected to carry forward next year also. We'll review the last months. Nifty gave a return of 2.5%, but the stocks we gave a negative 2%. We'll talk about these two companies, Imami and RateGain, was given minus 11 and 13%. See, Imami around 11 years back, they had a court case, and the result had come only yesterday. So a customer had they filed for misguiding advertisement. So they lost the case yesterday, and it is on basis of that sentiment that the company has gone down. But we don't see it as a main concern, because for both RateGain and Imami, their Q2 numbers are really good. So particularly for Imami, we expect once quarter 3 is over, we expect them to climb up a little bit more. And regarding rate gain, they lost one major customer in US, so which contributes to around 4% of their revenue. So still management has given a guidance of 20% for the next year, revenue growth of 20%. It was 25%, they have cut down to 20% because they lost the revenue. And this is excluding the new orders that are coming up. So we can easily expect the numbers to climb up for rate gain as well. And regarding everything else, you can still hold Mahindra. HCL Tech has done really well, mainly because as we spoke last time, the IT recovery is coming and we are seeing that. Nesco also after Q3, for Nesco and M&M also after Q3 we can expect good climbing. We have three NFOs. First is Aditya Birla Sun Life conglomerate. So they invest in conglomerates like L&T, Tata, Jindal, and Bajaj Finserv Healthcare. So the mostly the fund focuses on healthcare as a whole, mainly into many hospital stocks, pharma companies, intermediaries who are serving the pharma companies. And finally, we have SBI Quant Fund, which is mainly they use quantitative analysis and algo trading to select their stocks. Those interested can contact the mutual fund department, they'll guide you. Okay, thank you.